Hello, hello. I'm here to talk about meme stocks, specifically how to trade them, their momentum, and the three phases that they typically go through. Let's get into it. The first phase, I like to call it momentum or full momentum, in which the stock consistently moons, it only has green days, and it breaks all time highs consistently. Let me show you some examples on my screen. Alright, so these are some of your favorite meme stocks: AMC, GME, Neo. Alright, now can you see the pattern? Now, if you're thinking to yourself, the pattern is that all of these stocks have a gigantic extended period where they just go up and up and up and up, then you're right, because they do. For example, let's take Viacom. It went up for around, I don't know, it's 8 months. Neo, 6 months. Billy, let's see, 3 or 4 month, just straight up green candles. Triple D, DDD, 2 months of straight up green candles. JKS, another 2 months straight up green candles. If you were to buy at any point in this moon period, this phase one full momentum period, you would have made money no matter what entry you got. If you bought all time highs, you just would have just printed free money because you got lucky, you got in on this phase one, right? So what happens after phase one? What's phase two? So phase two is actually the rug pull phase or the knife down phase. In this phase, you'll see full momentum, exuberance turn to fear, and people panic selling as every all of the prices just drop violently. The price is going down as fast as it went up, sometimes even faster. People are taking profits, they're fleeing, there's no supports. So if you want to play this, well, first of all, if you're playing the upside, you better get the heck out as fast as you can because it's not coming back, right? And the second thing is you only have 1 or 2 or 3 days to play the downside because it's just dropping so fast. Alright, let me show you some examples of this knife phase in action. Okay, so as we said, it took about 8 months or 5 months rather on this chart for Viacom to go up from 30 to 100, right? But in a matter of days, it went down from 100 to around 45. So as you can see, you only have around 1 or 2 or 3 days to play this downside. Otherwise, you'll miss the move entirely. So if you see a stock that went from all-time highs and just suddenly tank, you know this is your window of opportunity to go in. So another good example of this is DDD, where it consistently mooned from 10 to 54 in a matter of 2 months. But then it's immediately entered phase two, where it just dumped for a whole month. But this was a slower moving ticker in terms of dumpage, because you actually had a month to get in on a downside before it finally bottomed out. So the third phase is what I like to call the range bound phase, where the stock is just stuck in a range post dumpage. It won't really move because it will only go up and down in a tight channel or range. This happens because there's no confidence in the ticker and no one really wants to play it anymore. So, when you realize this as a buyer, it's time to get the heck out. This is really bad for option buyers or buyers in general because data and IV crush, as you can see here, will just bleed your premiums out until they expire worthless. And even as a stock underlying buyer, you won't really make money because it's just range bound. So your money is definitely better used in other stocks. Alright, so let's draw the structure of these three phases. Alright, so like I said, phase 1, continuous moonage. Phase 2, dumpage, 1, 2. And then phase 3 right here, range bound. Remember, you want to buy on phase 1, get your profits on phase 2, or play downside. And phase 3, as a buyer, just don't play it anymore. Get the heck out, find another ticker. There's always another opportunity. Don't worry about this one. Alright, here's another example. Tiger. As you can see, we have the moon phase, we have the dump phase, and the range bound phase. 1, 2, 3. So you want to play the upside here, and then as soon as you see it dumping on one of the first two candles, you take profit, immediately swap to downside, until it finally bottoms out, and then you flee this ticker when it bottoms out because it's going to be in this range bound state, right? You don't want to play this ticker anymore because it's going to be range bound and it's going to bleed your premiums out. Alright, now how do we put these concepts into practice? Because doing this exercise on old data is very easy, right? Because the move already happened. Well, here's HD or Home Depot. You can see it's already on its phase 1 of the moon mission. And then maybe we can set a price target, maybe at 350 for it to finally top out. And then we'll take profit here if we're longing here. And maybe we can play downside, right? Maybe it'll, I don't know, bottom out at 280. And then after we play downside and take profit there, it's going to just be range bound and we could just move on, right? Move on to another ticker. Alright, so here's another example. Actually, one of my favorites to play right now. It's Funko. As you can see, it's been on its gigantic moon mission, right? And then maybe we can set a price target while we're longing this ticker, maybe at 40 for phase 1, right? And then when it dumps, it'll probably dump and bottom out maybe, I don't know, what's a 50% retracement? 220, right? So we can take profit here, play downside, and then just leave the ticker as it's going to be range bound. So this is another example where you can apply the practices we talked about. Alright guys, I hope this video helped for you to understand how to play and trade meme stocks better, to help you understand the structure and the phases of these meme stocks, and I'll definitely be making more videos on this topic in the near future. Thanks for watching!